And we don't really have full details on that quite yet. And we know that ByteDance has repeatedly refused a sale.
So in the meantime, what's going to happen to all those advertising dollars that flow through TikTok? What are the implications for US creators as well?
So in terms of the ad market, if this continues, TikTok's ad dollars would most likely be reallocated primarily to Meta and YouTube, which we believe will rake in about 50% of those reallocated ad dollars. Now, we don't expect advertisers to start reallocating their TikTok ad dollars immediately, but again, they would be the biggest winners here. Creators will probably migrate to Instagram and YouTube as well. We saw some of that start to happen yesterday. I saw one big name influencer, for example, post a carousel on Instagram almost immediately saying, we're hanging out here right now. But besides Meta and YouTube, there is a long list of other beneficiaries here. I mean, TikTok crosses so many different parts of our digital lives. And so I could expect platforms from Amazon to Netflix really to start picking up some time spent, some users, as well as some ad dollars.
Well, it is the fact that it is so embedded in so many Americans' lives now, and also that it is a Chinese national security law that a Chinese company must assist in matters of national security. So none of that has gone away. Are these concerns justifiable, that it does pose a security risk to the U.S.?
Well, I think these concerns are valid, and there is certainly a risk. I think one of the problems is that the government hasn't been able to convince the American public really of these risks. They haven't been able to provide clear evidence to create enough support for this ban. And a lot of times when I'm talking to young people in particular, one of the things that they say all the time is that their data is already out there and that they aren't as concerned about privacy. And of course, it's not just TikTok, that collects data and information on its users. This is something that all social media companies do. It's just that TikTok happens to be owned by a Chinese company.
And just broadly speaking, I mean, given the start of the Trump administration again, are we expecting just broader deregulation in the tech industry, which seems to be sort of the broad theme here with this incoming administration?
Yeah, we're certainly seeing that social media is being remade for the Trump era. We're seeing that from platforms from Meta now all the way to TikTok. I think there is a fear among a lot of users right now, given Trump's heavy hand in restoring access to TikTok in terms of what the app could look like going forward. We know that Facebook and Instagram, for example, have loosened a lot of the restrictions on political content, done away with some of the third-party fact-checking, and all of that could really reshape social media to be more favorable to the Trump administration.
Exactly. Even when it comes to Mark Zuckerberg, we have seen him really add some of those Trump supporters into his board even. So what can we expect in terms of this new cozying up between the Trump administration and perhaps these tech giants?
Well, we're seeing this really across the board with all of these tech giants trying to curry Trump's favor, right? I mean, we could see a big shift in terms of how political content is treated on these platforms. I think we're already starting to see the beginnings of that. We know that social platforms are places where people go to get news and political information, and we're seeing a strong polarization on many of these platforms. And I think that that is going to persist and exacerbate over the next 4 years.
All right, Jasmine Emberg, Vice President and Principal Analyst at eMarketer. Thanks so much for joining us today. Now, China is facing a repeat of the tensions and uncertainty from the first Trump presidency, only this time with a weaker economy that's even more reliant on exports. China correspondent Min Lo joins us in Hong Kong. And Min, it's going to be an eventful week. What can we anticipate in terms of tariffs and a potential trade war?
I mean, it's hard to say because Trump has threatened up to 60% tariffs on Chinese goods. But after he won the election, he had said he could be considering 10% additional tariffs on top of the existing levy. So no one really knows how that trade negotiation will go. And as you heard earlier, that whole conversation around TikTok will likely factor into negotiations as well. But you can see that last year, China's trade surplus was at a record high, close to $1 trillion. That's 5% of China's GDP. Exports had been the bright spot for China last year, and it's going to be a big vulnerability this year given the threat of tariffs. And we have seen what's different now compared to, say, 5, 6, 7 years ago is that there has already been some sort of trade diversification going on. U.S. direct purchase of Chinese shipments have fallen from about 19% in 2017 to less than 15% now. And China, meanwhile, is selling a lot more goods to countries like Vietnam, for example, just as Vietnam's trade surplus with the U.S. has ballooned to be the third largest, right after China and Mexico. So countries like Vietnam are becoming this sort of transshipment hub, buying goods from China, selling it to the U.S. So when you look at final demand for Chinese goods, U.S. is still a big player here, buying up about 3% worth of Chinese GDP's worth of goods last year.
We have seen that phone conversation between President-elect Trump and President Xi Jinping. Can we expect at least some cooling of tensions in the first few days of the Trump administration? What will you be watching out for in order to gauge the future relationship of these two countries?
Well, China's readout of that phone call had mentioned that Trump was looking forward to meet Xi, which sort of confirms some of the other reports we have heard from Wall Street Journal, for example, hearing from sources that Trump's team is looking to set up a sort of meeting for Trump to visit China, maybe in his first 100 days in office. And a key point in that Chinese media readout as well highlighted China's stance on Taiwan, its sovereignty over Taiwan, cautioning the U.S. to proceed carefully on that front. Not a lot of actual practical matters when it comes to fentanyl or even TikTok that was mentioned in the readout, although that has been covered heavily by Western media. But the focus of the Chinese readout, the tone there is really quite different, with 5, 6 paragraphs really focusing on just rebuilding these relations between the two sides, talking about carving out more space for cooperation. There has been 2 editorials on Chinese state-linked media, People's Daily and the Global Times, really talking about restarting this relationship from a new starting point. So there is very clear intention, at least from the Chinese side, to try to make things better or start things on a better note at the start of Trump's administration. So we'll have to see how negotiations go from here.
All right, Bloomberg's China correspondent Min Min Lo there. Other geopolitical stories that we're following. China's military says it conducted naval and air combat readiness patrols in the South China Sea on Friday and Saturday. A statement by the Southern Theater Command did not specify exactly where the patrols happened. On Friday, the Philippine Navy said it was holding drills near a disputed shoal where a large Chinese vessel had been seen. The South Korean court has issued a fresh warrant to formally detain impeached President Yoon Suk-yeol. It allows investigators to keep him in custody for up to 20 days as they look into criminal allegations over his martial law declaration. If charged within that period, Yoon will stand trial and can be detained for up to 6 months. More ahead on the Asia trade. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Big week for earnings as well. SK Hynix, Disco, and Nidec are some of the big Asian companies reporting results. Do watch out this week, especially TSMC having projected strong quarterly sales. That's fueled hopes that AI hardware spending remains resilient. NVIDIA suppliers SK Hynix and Disco are expected to report positive earnings thanks to the newly announced Blackwell chip product line. Let's bring in Bloomberg News earnings specialist Rena Sasaki. Rena, it seems that AI will be again the key focus for this year as we head into earnings results as well. What are you expecting, first of all, from one of the leaders in this industry, which is SK Hynix?
Yes. So SK Hynix, the results, we're expecting their earnings to surge from a year earlier, from relatively low basis. And for quarterly growth, we're expecting it to grow thanks to the higher average selling price for DRAM chips and the robust demand for the memory chips for AI. And
what about the rest of the sector? Of course, we're watching in the tech space, Nidec, Disco as well.
Yeah, so for Disco and Nidec, we're expecting their third quarter result to grow double-digit this quarter, thanks to the AI-related the demand. And as for Nidec, some analysts are expecting that the hype around the AI business could be risky, given the rough expectation. But the outlook for the NVIDIA suppliers, SK Hynix and the Nidec, are the same positive thanks to the recently announced the product line.
Raina, we're going to hear from another number of Indian banks as well. To what degree might they suffer in an environment of falling wages and rising inflation?
Yes, so the falling wages and high inflation are expected to dent the earnings of HDFC and Hindustan Unilever as they report on Wednesday. HDFC is projected to post a slower profit growth as it prioritized the loan deposit ratio over lending growth. And Hindustan Unilever is expected to post around 5% of net income growth thanks to the price increase. But the margin might have suffered and then shrunk given the higher lower material costs, including coffee and in cocoa. And then the sales volume is expected to slow down despite the festive seasons in India.
Bloomberg News earnings specialist Rena Sasaki here with what to expect from the Japanese and Indian markets this week. But let's take a look at how Rakuten is trading right now. The e-commerce giant is rebounding from losses that we've seen in the past session on Friday, just rising with the broad market as well. However, when it comes to the past year, we have seen outperformance gaining more than 30% from its summer low. Rakuten Group CEO Hiroshi Mikitani dismissing skeptics who call the Japanese e-commerce giant's mobile foray a mistake. Mikitani told us exclusively that the company's telecom arm is central for future growth through artificial intelligence.
Whether you can utilize AI and in a very efficient and economical way or not is a key. I'll give you an example that, of course, when Google started shopping search, everybody said, oh my, Google is going to take over shopping world, right? The fact is, it was not. right? Amazon, Rakuten, maybe some other e-commerce companies are very, very strong. So I think and we don't use Google search. We have developed our own search. So there's two things. One is what we call very strong AI, which is like a generative AI, like OpenAI or Gemini or whatever. And there's more, vertically specific AI, which we call it weak AI. So we have no intent to compete against, OpenAI or Google, but we will actually build the more vertically integrated specialized AI.
Within Rakuten?
Within Rakuten, with our own large language model. Of course, we use the external third-party LLM, but also we are developing our own.
How much of that development is in-house? Because I do know that you have strategic cooperation with OpenAI as well.
Yes. So generative AI, again, we use OpenAI. Sometimes we hybrid with our internal large language model. So if you just think the question or prompt is about shopping, we use it. But if I ask about medical questions, we cannot do this, so we go to OpenAI or third-party AI.
The future of artificial intelligence takes so much energy. Is there enough energy to power that change here in Japan?
Well, of course, two things. One, of course, just GPU will consume more electricity, but it depends on the design of your architecture, right? Do you need to compute everything from scratch, or can you memorize some of the question that's being asked and you process already for a longer time by caching the knowledge? Is it possible or not? And at the same time, using AI, in general, we may be able to reduce electricity consumption. 90% of electricity we're using in Rakuten Group is coming from mobile business. Of course, we have a big data center. All these radio stations use electricity. But in 2025, we are going to reduce our electricity consumption by 20% using AI.
And I know that in itself, when it comes to energy efficiency, you're carrying out trials with Ampere in order to cut some of that energy usage as well. What are your plans on that cooperation? Because we're also hearing that SoftBank's arm perhaps wants to take over that business as well.
Well, with regard to semiconductor, we are not really sure. Of course, ARM is a beautiful architecture. I know that Masa is making big bet on it. But so was other semiconductor companies. But I think the architecture will become more and more efficient. And we want to be platform agnostic. So whoever we can partner, we'll partner.
So do you ever think, I should be owning one of those as well for my future long term?
No, in a big scale. It's not our business. Our business is more centric in utilizing data, providing a better experience to the consumer, and let them, transact. So that's our business, except our mobile network technology business. Because I think what we have done in Japan is not only, disruptive in terms of the customer, but technologically it's fundamentally totally different from what other carriers has been building.
And that was part 2 of our exclusive conversation with Rakuten CEO Hiroshi Mikitani. And there's more coming up. We did get exclusive access as well to Rakuten's headquarters in Tokyo. We discussed their investments in sports, medical research, as well as how they're bracing for the Trump administration. That's coming up on The Insight at midday in Tokyo. More ahead on the Asia Trade. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Hyundai and India-based TVS Motor are exploring a partnership to make electric three-wheelers and micro four-wheelers for the last-mile mobility market in India. They presented concept models at a car show in New Delhi, announcing that Hyundai will focus on the design, engineering and technology. TVS, meanwhile, will manufacture, market and co-develop the vehicles. Instagram has announced a new video editing app called Edits to be set to be launched in February. Now, the announcement comes as rival TikTok faces uncertainty in the US due to a federal sale or ban law. TikTok's parent ByteDance owns a popular video editing app called CapCut, which was also taken offline in the US. Sherry.
Yeah, Paul, take a look at some of the stocks that we'll be watching when markets open in Hong Kong and mainland China. Watching the EV space closely. Specifically, keep an eye on BYD. That's after accounting consultancy GMT Research reported that the company's reliance on supply chain financing has masked surging debt levels, Paul.
Let's take a look at what's going on in the commodities space. I want to start off on iron ore. It's had an uncharacteristically good run recently. Iron ore on a 7-day win streak at the moment. Currently still holding on above $104. One of the better performing stocks on the ASX today is Fortescue Metals as well, which is a pure play iron ore stock. And the cyclone that was approaching the west coast of Western Australia, Cyclone Sean, a Category 3 storm, heading out to sea now, so Port Hedland, which is the world's biggest iron ore terminal, has resumed operations. Take a look at oil prices as well. Also had a good few weeks. Crude 78.47 at the moment, Sherry.
And we may get a good start for other markets that are setting up for trade, especially in China. You can see A50 futures are closed, pointing to the upside of 0.7%. Renewed optimism, perhaps, and some relief with Trump and Chinese leader Xi Jinping holding a phone conversation. U.S. futures not doing much. Markets closed on the Monday session for a holiday, but we're seeing Asian stocks right now broadly gaining ground. We do have China's commercial banks announcing their 1- and 5-year loan prime rates later today. This is Bloomberg.
where do you think the tech world is going? Is artificial intelligence going to eat up the rest of the tech world? And where do you think the future of technology is going in Silicon Valley and elsewhere over the next 5 or 10 years?
Well, I think that one thing we talk about when we talk about technology is we have this kind of monolithic idea of what it is, but actually technology is changing different industries at different paces in so many different ways. And if you think about the things, what was technology like 20 years ago before the iPhone, for example, and where it is today, the ability to have, answers in your pocket. Gen AI is going to make it easier to access more information faster. How do we think about all those things, and where is that going to go beyond this? I actually am very bullish on technology because technology is an underpinning. It's not its own industry. It is a part of every industry, and it's actually going to increase productivity and actually make our lives better.
So you think technology is still going to be centered in the United States largely around the Silicon Valley area, or is it going to change?
I think that what's amazing about what technology has done over the last 20 years also is that, now you can start an app anywhere in the world. You can live anywhere. You can have, AWS, and you can set up and not have to have a system administrator or a server that you have to build. Now it's made it so much easier with these tools to actually look at a problem that you have and solve it anywhere. And so I actually think that distributes the ability for us to bring technology together any place.
In case you missed it on Bloomberg Crypto.
Are you concerned that with this new stablecoin, folks will be less interested in XRP?
We see them as really complementary to one another. So dollars can be a very effective means for payments, and we have seen that demand from within our customer base. XRP is it's the native asset to the blockchain, so it's used for things like transaction fees on the blockchain, but then also can be a bridge asset to trading different tokens on the XRP ledger. So we really see the two playing complementary roles.
Some of the biggest exchanges out there are missing from this announcement. So what about a huge platform like Coinbase and others, for example? When does that happen?
You can expect to see more availability, more announcements coming soon.
How soon?
Imminently.
Don't miss Bloomberg Crypto live on Tuesdays.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything.
We're half an hour away from the open in Hong Kong, Shenzhen, Shanghai. You're watching The China Show. I'm Annabelle Drewlers with David Ingles.
Let's get to your top stories today. Donald Trump's call with President Xi Jinping boosting market sentiment. As you can see, Asian stocks rising ahead of his inauguration. And later on in the show, we'll take a deep dive into U.S.-China relations with the German Marshall Fund's Bonnie Glaser and Taihe Institute's Einar Tangen.
The president-elect is reiterating plans for a flurry of executive orders on his first day in office, declaring an end to what he calls years of American decline.
And TikTok restores service in the U.S. It's after Donald Trump said he would halt the enforcement of a ban to give ByteDance more time to find a buyer. Good Monday morning. Just straight to some breaking news right now. The loan prime rates out of China, 1 and 5 year, both unchanged. The 1 is still at 3.1%. And the longer tenor, 5 year, which is effectively where most mortgages are tied in benchmark to, unchanged here at 3.6%. I'll leave it there for now. Bill, market check, please.
Yeah, well, I think that's for a third straight month there, no move. But in terms of what we're seeing in the session today, keeping an eye on what's happening with the offshore yuan there, but also what we're seeing for futures ahead of the open, because if we take a look at where the Golden Dragon Index closed on Friday, that was a very significant jump there of around 3% or just over. What really drove that, and one of the big factors down to that, was this call that was held between President Xi and Trump ahead of his inauguration on Monday. You can see that the last close for the Golden Dragon Index, and that put a lot of optimism into the markets. That is also translating across when we take a look at how Asian equities are trading in the session so far today. We've actually just come off the best week for for global stocks in a matter of months or a couple of months. Here, though, you are seeing again that feeding into the Monday session so far. Particular gains for the Nikkei 225, up 1.1% now. Bond futures there to note as well in treasuries, because we do have US market shut for an extended holiday break, but that there sets the tone. One of the other particular things we're watching out of is perhaps a bit of improvement in the US-China relationship is the Aussie miners. That's what's leading the ASX 200 higher in the session so far. But I was as well, Dave, and we were just talking about